Remember FTX? $32 billion gone overnight. Everyone called it a once-in-a-generation fraud. But here's the thing. Sam Bankman-Fried was basically copying Bernie Madoff's homework. Same playbook, same lies, same devastation. Just 20 years later with cryptocurrency instead of stocks. We are told Bernie Madoff was a glitch in the system, a singular monster who pulled off the biggest financial scam in history. But the terrifying truth is that Bernie Madoff did not just hack the system, he built it. He didn't just steal $65 billion, he pioneered the very electronic trading technologies that apps like Robinhood and Wall Street hedge funds use today. This is not just a story about an old guy running a Ponzi scheme from a basement. It is a story about the absolute foundation of modern finance. And the craziest part? The mechanism of secrecy he used to hide billions of dollars is still completely legal right now. To understand the con, you really have to understand the man. Bernie did not look like a criminal. He wore tailored suits, had a disarming smile, and literally served as the chairman of the NASDAQ stock exchange. If you're wondering why thousands of people, charities, and the biggest banks in the world handed over their life savings to this guy, it's because he was absolute Wall Street royalty. He sold exclusivity. You did not just get to invest with Bernie. You actually had to beg him to take your money. It was the ultimate financial FOMO. He preyed on country clubs and tight-knit communities using what we call affinity fraud. People figured, hey, he's one of us. He's incredibly rich. He must be legit. Nobody wanted to be the one asking the annoying questions. But behind closed doors, Madoff was running a literal financial mullet. Business in the front on the 19th floor, where all the legitimate trading happened, and a giant gaping Ponzi scheme in the back, safely hidden down on the secret 17th floor. Down there, Bernie claimed to use a highly complex secret strategy called split strike conversion. He promised perfect returns of 10 to 12% every single year, regardless of whether the economy was booming or burning to the ground. Spoiler alert, there was no secret strategy. The money just went straight to his personal bank account at Chase Manhattan. To pay off the old investors, he just used the cash he collected from the new investors. It was the absolute oldest trick in the book. But how do you trick the world's smartest auditors for decades with a dinosaur IBM computer and a kitchen refrigerator? Seriously. His team would print out fake trading records, put them in the fridge to literally cool them down, and then toss them around like a basketball so the paper looked old and heavily handled. That was the genius Wall Street magic, cold, wrinkled paper. Now you might be thinking surely someone saw through this, and someone absolutely did. An eccentric math nerd named Harry Markopolos looked at Bernie's incredibly smooth, straight line of profits and realized it was mathematically impossible. Harry said it was like a Major League Baseball player batting .960 for an entire year. You don't need to be a finance bro to know that real markets have jagged edges. Real markets go up and down. Bernie's only went up. Harry warned the SEC, the government watchdog, 5 separate times. He handed them the fraud on a silver platter, and they completely ignored him. They sent lawyers who barely understood basic math to audit a man they worshipped as an untouchable god. And the giant feeder funds? The massive Wall Street banks? They probably knew the math did not make sense either. But they were making hundreds of millions of dollars in fees just to funnel your money into Bernie's black box. It is honestly amazing how blind you can become when your eyes are covered in cash. The only thing that can kill a Ponzi scheme is when everyone wants their money back at the exact same time. Enter the 2008 financial crisis. The economy was a total dumpster fire. Desperate investors asked Bernie for $7 billion back. The problem was, Bernie only had about 200 to 300 million left. The magic ATM was completely empty. On December 10, 2008, a broken Bernie Madoff looked at his 2 sons and confessed that his entire empire was just one big lie. His sons turned him into the FBI the very next day. The illusion shattered overnight, leaving devastated retirees, bankrupt charities, and a tragic wake of suicides, including his own son. Bernie was sentenced to 150 years in prison. But did he learn his lesson? Of course not. Once behind bars, the man who stole $65 billion cornered the prison market on Swiss Miss hot chocolate. He bought every packet in the commissary and sold them at a premium in the yard. He was a ruthless monopolist until the day he died in 2021. But here's the real kicker, the part that should actually terrify you right now. Bernie Madoff was not a glitch in our financial system. He was the ultimate feature. Today, we laugh at the idea of trusting cold paper from a fridge. But look at the modern financial landscape. Look at the trillions of dollars locked up in private equity and shadow banking today. These massive funds pool money from pension plans and lock it away in private companies. There is no daily public market price. The assets are valued internally, behind closed doors, by the exact same people managing the money. They operate with total opacity, exclusivity, and the promise of unnaturally smooth returns without the wild volatility of the stock market. It's not a literal Ponzi scheme, but it relies on the exact same psychological blind spot that Bernie Madoff weaponized. It pushes the terrifying idea that a lack of transparency is somehow a premium feature for sophisticated investors. Bernie Madoff may have died in prison, but the exclusivity, the unquestioned trust, and the willful silence that allowed him to thrive, that is still very much alive on Wall Street. And if you think Madoff was bad, wait until you hear about the company that literally convinced the entire world it was profitable while burning through cash like a dumpster fire. A company so big, so connected, that when it collapsed, it took down Arthur Andersen, one of the big 5 accounting firms, with it. That story is coming next. Drop a like if this pattern is starting to freak you out, because once you see it, you cannot unsee it.